Starting next month, millions of Americans with federal student loans could face serious consequences. If you're in default, the clock is ticking. Collections are about to begin. The U.S. Department of Education has announced that federal student loans that are currently in default will soon be referred for collection. According to the Associated Press, an estimated 5.3 million borrowers are now at risk. And what does that mean in plain English? It means borrowers could soon see their wages garnished, their tax refunds intercepted, and even parts of their Social Security payments seized, all in an effort to collect on unpaid loans. This isn't a new practice. In fact, the Education Department has long used these tools. But collections were paused back in March 2020, during the early days of the pandemic under the Trump administration. Since then, both the Trump and Biden administrations extended the pause multiple times, giving borrowers a temporary financial lifeline. But now the pause is officially ending. Starting soon, the Department of Education will resume involuntary collections through the Treasury Department's Offset program. Here's how it works. If your federal student loans are in default, meaning you're at least 270 days late on a payment, you'll soon receive communication from federal student aid officials. You'll be notified about your options, but if no action is taken, the government can automatically take your wages, tax refunds, and even certain federal benefits to repay the loan. Again, this is known as involuntary collection, and it can happen without you having to approve it. It's worth emphasizing, as Linda McMahon once said in a Wall Street Journal editorial, you can't repossess a college degree. Once you have that diploma, they can't take it back. So when borrowers default, the government is left with limited options, often resorting to aggressive financial tactics. Millions are about to be directly impacted. If you're one of them, look out for an email or letter regarding your loan status. If you're unsure whether you're in default, go to StudentAid.gov. There you can log in and quickly see the status of your federal student loans. If you're in default, don't panic. It doesn't mean your paycheck will be immediately garnished. The White House has emphasized that borrowers will first be offered options. You'll likely be able to enroll in an income-driven repayment plan. These plans cap your monthly payments based on your income and family size, and sometimes payments can be as low as $0 per month. It's crucial to act quickly though. Ignoring the notices could lead to automatic garnishments or seized refunds. Now let's step back and talk about the bigger picture. College is still a valuable investment. Data shows that college graduates, on average, earn about $1 million more over their lifetime compared to those with just a high school diploma. And the unemployment rate for college grads is almost half that of high school graduates. However, the cost of college has skyrocketed. Families are now much more cautious about whether expensive brand-name universities are worth the massive debt burden. Today, with free online courses and alternative career pathways, college degrees have been somewhat commoditized. It's no longer just about where you went, it's about having the degree itself. Given the costs, student loans should be a last resort when paying for school, after scholarships, grants, savings, and work-study programs. Over the past 5 years, we've seen enormous shifts. Under the Trump administration, student loan payments were first paused. Then, the Biden administration extended the pause and attempted broad student loan forgiveness. While some forgiveness programs succeeded, many were struck down by the Supreme Court. There's been a lot of confusion. Some borrowers thought their debt would simply be erased. Others assumed the pause would go on indefinitely. Now, with the new Trump administration back in office, the messaging is clear. Student loans are real debts that must be repaid. If they're not, the burden eventually shifts to taxpayers. And that's not fair, because those who never attended college would end up paying for degrees they didn't earn. Check your student loan status today at StudentAid.gov. Take action before collections start. Protect your paycheck and protect your future. So we talked about how federal student loans are going back into collections, and how millions of borrowers are at risk. Now let's flip the conversation. How can you pay for college without depending on loans? And just how expensive are the most prestigious colleges compared to smaller universities? Let's dive in. First up, scholarships. Scholarships are free money awarded based on merit, academics, sports, community service, or other talents. You don't have to pay scholarships back. And the best part? There are millions of dollars in scholarships that go unclaimed every year. You can find scholarships locally, from businesses, community organizations, even your high school. And nationally, websites like FastWeb, scholarships.com, and even College Board list thousands of opportunities. Next, grants. Grants are need-based financial aid, typically based on your family's income. The most common one is the Pell Grant, awarded by the federal government. In 2025, the maximum Pell Grant is about $7,395 per year. Other grants can come from state governments or directly from colleges. The difference between grants and loans: grants do not have to be repaid. Another way to reduce debt: work-study. Federal work-study programs provide part-time jobs to students with financial need, allowing them to earn money to pay for educational expenses. The jobs are often flexible around your class schedule, and you gain valuable work experience at the same time. Here's a smart move. Start at a community college. The average annual tuition at a community college is about $3,900, compared to $10,900 at a public four-year university. Spend 2 years at a community college, earn an associate's degree, then transfer to a university to finish your bachelor's. You save tens of thousands of dollars, without missing out on the degree. More companies today offer tuition reimbursement. Amazon, Walmart, Target, Starbucks. They all have programs to help employees pay for college. You work part-time or full-time and earn your degree with little to no debt. If you're willing to work while you study, this is a powerful way to avoid loans altogether. Don't forget about the GI Bill and public service loan forgiveness options. Military service can qualify you for full tuition benefits, housing allowances, and even stipends for books. Some public service programs, like AmeriCorps or Teach for America, also offer education awards that can be used toward college costs. Now let's talk about the reality of college prices. The most prestigious colleges in the United States, like Harvard, Stanford, Yale, and Princeton, have sticker prices between $60,000 and $85,000 per year, including tuition, room, and board. Meanwhile, smaller private colleges often charge between $30,000 and $50,000 annually. Public universities, in-state tuition averages around $10,900 per year, and even less at community colleges. But here's the twist. Elite schools often have massive endowments, and they offer generous financial aid. At Harvard, for example, families making under $85,000 a year typically pay nothing for tuition. So while prestigious schools have scary price tags, small universities and public schools may be the smarter financial choice, especially if you're paying your own way. Student loans aren't your only option. Scholarships, grants, smart school choices, and employer programs can all help you graduate debt-free and stress-free.